It is Sunday, the 9th of May 2021, and want to just kind of recap on last week. So, first of all, there's a couple of things I think are worth highlighting here. I think the Dow is certainly just so incredibly bullish at the moment, and that hasn't always been the case. In fact, over the last year, maybe 18 months, the NASDAQ has often been kind of leading and with the Dow following, but actually the Dow is doing incredibly well now. So we had a really kind of a break to the upside, which I spoke about last week, which would be encouraging because I was anticipating a relatively decent correction, which we had. But it was, and again, this is another reason why the market is juiced up, is because the corrections are so quick. Where they should be 3 or 4 days or maybe a week and then carry on, they last 2 days. And the market just is almost super ready to just keep getting back in the game. Anyway, so already we're back up kind of towards the end of this channel. I think 35 is within sight now, so probably it's want to at least go up to that this week, which might offer some money making opportunities. Higher risk, of course. For me on Monday or Tuesday, we'll see the weekly is now starting to push away from the moving averages. So actually, when you look at it on this one, it would at least kind of maybe push through to 36, but at some point there we're going to have a bigger correction, and now on the monthly it's just ridiculous now. Just the distance we are from the moving averages compared to other points in its lifespan, that's just ridiculous. So we're already at almost the brand new historical distance, which is, again, there's no way that can't be defined as because it's historical as opposed to hysterical. It's worrisome. Same thing here. We go across the S&P. The daily looks really good in isolation, really nice. We did have a really strong correction, which is great to let off some of that buying pressure, and immediately recovered and closed up on all-time highs. I mean, that's just insane that it was kind of due for that correction and still finished on all-time highs. Anyway, I laugh at it in terms of how, I guess, what strange times we live in, I guess. The weekly now looking nice and bullish. Towards the top of the channel, but still could have room to go. What's the next kind of big number here? Fall 3. Possibly that's an idea. And the monthly, in terms of its kind of distance, it's kind of consistently that far away from the moving averages. But absolutely, I don't know how else to say this, but if I kind of go through all the years I've ever been trading and I look at all the history in the last 20, 30 years, I've just not seen the monthly kind of go that far away from the moving averages. And so I don't think, it didn't even go that far away during the 2009 financial crisis, or prior to that, the 2007 bubble, or the .com. So I'm concerned. I think feasibly concerned with that. So here we have the NASDAQ. Now the NASDAQ is kind of a little bit different in the sense that it's had a consolidation. It hasn't been as bullish. It managed to have pulled away. So it has, the angle has kind of started to slow. If you look at how steep it went up here and then it's kind of started to flatten out, that's kind of cool. At the same time, it really hasn't managed to change the outlook here. It had a little bit of a correction, finished up with a bit of a bullish candle. But these two similar highs with bearish divergence, they hint at exhaustion. Okay, so NASDAQ is exhausted, and if the NASDAQ drops, it's going to pull everything else with it, simply just because of market cap. And here again, we've had like that multiple failures at this key level. Call it 14,000, but it's a little bit above that, and bearish divergence. And now we're underneath here. So this week, what I'm going to be looking for is to see if we break the high of last week's candle. I think, given all the juice that's definitely in the system at the moment, it's certainly going to give that a go. But for me, this is becoming incredibly high risk. For trading opportunities, it just means that I can't tell if there's, usually I can get a good sense of it, but I can't tell if there's going to be a big correction in the next week again, if there's going to be another stumble again, or if it's going to be 3-4 weeks from now. But so that's why it just means that if I am trading, I'm taking intraday positions, shorter term. I'm not as comfortable because now the monthly on all the three kind of big ones are starting to become a little bit ridiculous, and the dailies are starting to become a little bit more choppy, and all of that really is, and the weekly, especially on the NASDAQ, is this is not a good sign. Okay, this is there's bearish divergence and a slightly higher high. This implies that there could be a correctional consolidation on the weekly happening here. So what for me would be a confirmation of that is if this week the market just drops again. So although it's gone up to new highs, the NASDAQ actually, the tech companies just actually drop down and come down to lower numbers. If that's the case, then that supports the idea that we're in for a little bit of a winter, so to speak. Anyway, so let's have a look at the Russell 2000, still within its little kind of consolidation patch there. Look at that. That's a mess. Definitely a consolidation, showing a little bit of a struggle and exhaustion here. This can consolidate for several months, but this is also showing signs of a potential correction down to about 2000. Okay, or potentially lower. Although it is in isolation on the daily is kind of really bullish and trying to push higher. This is what happens at top of the bubbles. Is they're at their bullish, at their most bullish, obviously at the point at which they then run out of steam. So the fact that it looks bullish now doesn't mean, oh well, it's unstoppable. It's going to look unstoppable till it is stoppable, or until it stops. So it just means caution. Um, and so again, but this looks great. So now it's very nice to see the FTSE kind of pushing through. I'm really, really happy to see it. Looks as though it's heading its way up to the old, or to the most recent, I beg your pardon, I was going to say old all-time highs, but I'm not referring to really old ones. I just mean as into those in the last couple of years, especially since 2019. Would love to see it push onto that. And I think it could do that without stretching itself too far. The weekly also looking very good. And so in a way, maybe, I'll look at all of them, but in a way, I feel a lot more comfortable about the health of the FTSE, believe it or not. Then having a look at the DAX. DAX has had that let off a lot of steam and now pushing back up, and that weekly candle looks great. So this now looking a lot better now that it had that correction this last week, but certainly also overextended on the monthly. So no different, no better than the rest in terms of that. Daily here on the CAC, very nice and healthy. The weekly looking okay, not looking that bad. That monthly starting to push. It's like all of them are pushing it, like in terms of the distance away from the moving averages. But I guess the mechanics that are driving the markets today are very different. I mean, these are central bank driven kind of. If we're in a bubble, it's a central bank bubble. So we've not really had that before, and so that's potentially where all the surplus cash and stimulus is coming from. Plus combined with optimism, and therefore it's because. In that sense, the characteristics are very similar to a dot-com bubble or the 2007 bubble, because there was that optimism, and the optimism this time is to do with the coronavirus vaccines and getting back to some kind of normal, or maybe having a holiday or travel. But it's optimism overlapping a boom in the markets, that doesn't really make sense. It's got a whole lot of stuff that there are similar characteristics. That's all. It's gonna be interesting to me. If I was vastly financially exposed, I would definitely be reducing my exposure in the markets. And Warren Buffett always goes on about it, and this is something he obviously from his university lecturer, who obviously very successful in terms of authoring one of the kind of almost all-time best books in terms of the Intelligent Investor by Benjamin Graham, and it kind of taught Warren Buffett mostly everything that he knew at the time. And one of the things he always spoke about was this weighting in our portfolios between stocks and bonds, and that when the stock markets were doing incredibly well, and had been going for a while, and were maybe kind of starting to reach their peak, that would be a very good idea to move, to switch the weighting from heavy in stocks and light in bonds to heavy in bonds and lighter in stocks. And this is what I would potentially be doing now if that was the case. Nikkei. So the Nikkei also going through a really nice consolidation on the weekly. Actually good to go, but that the problem is that monthly is showing similar signs of a bit of a stall and a need of correction there. So very cautious. I would probably avoid that for now. And the S&P as well coming into these all-time highs here. And we'll see how that goes. But yeah, that's that level. And you can see here price was unable to get through that this week. So this coming week, I'll be looking to see if it does get through that as well. And that's it. Let's have a quick look at Tesla and Apple, just out of curiosity. See what's happening there. You can see here again, Tesla not really able to go anywhere just yet. Tesla, it would do well to have a much bigger correction, but the alternative for those who are already invested, I think, to make everyone happy would be that there's a consolidation for a while, catches up, and then heads up, and then it does it, and that's a possibility too. Then having a look at Apple. Apple, as I said, appears to be kind of forming a kind of bit of a breakout pattern here. So I'm just going to highlight it here, and then so it's there. A little bit of a bullish breakup pattern, high lows. The buyers are underneath pushing in. There's not enough buyers above this, but if it keeps going, it'll consolidate and build up and break out. So that's what I'm looking for there, and that's it. So, ladies and gents, I'm going to exercise lots of caution in certain areas. I'm still more of a buyer than a seller, absolutely, but just really short moves, making sure I get my trade to break even, try to keep risk at its lowest. And obviously just monitor to see if there's any signs. But yes, if in the coming weeks we start to get more turbulence on the weekly charts, then it could be because the monthly is starting to kind of peak a little bit. So there we go. Thank you very much.